What's going on, everybody? It's another episode of the Keep Going podcast, and today I have a very special guest for you. His name is Mr. Russell Hunt Jr. He is an established real estate investor here in Oklahoma, as well as an OG in the space for anyone that buys real estate. If you go to any event, you'll see him there. If you ever need funding on a deal, he'll be the one you talk to. But this conversation was awesome. It had a lot of stories and personal touches as well on mindset and things like that. But it also dove deep into looking at deals, analyzing deals, looking at the market, when you should buy real estate, when you should go all in, and just how to keep going without getting burnt out. So I hope you enjoy the show. As always, keep going. Mr. Russell Hunt, I appreciate you coming on. Thank you so much.
Thanks for having me.
I'm excited for this one because I feel like I've known you for years, but mainly only talk business and then life quickly, but really wanted to learn more about you, but also kind of go through some real estate stuff also. So I appreciate your time.
Absolutely.
But for people who don't know, I know in the investing realm and the real estate realm, you're very known. As soon as I started getting into the off-market style real estate, you're one of the first people's name that got brought up to me on the funding side. But are you from Oklahoma? Did you start here?
I grew up in Pauls Valley, which is about 60 miles south of here, and then moved to Norman, then moved to Edmond. So I've been in Oklahoma my entire life and pretty much been, in Oklahoma City for the last 25 years or so.
A good amount of time. Mm-hmm. When you started real estate, was it young in your life or?
I started when I was 18. I actually learned about real estate when I was in college, when I was 16. Went to college early. So
where'd you go to college?
I went to college at UCO.
How do you go early? That's like the smart guy.
I graduated high school early and then went to UCO, started when I was 16. And I learned about real estate and thought that's the first time I'd really been exposed to real estate. And I got really excited, was like, that's what I want to do. And kind of thought that's what I wanted to do as a side business. I just thought it sounded really good.
Yeah.
And this was long before there was gurus and classes and everything. There was barely even books on real estate back then.
Really?
There was really only 3 when I went to the library. There's 3 books in the library about real estate.
You remember them?
Now there's a whole section. My favorite book ever is still the first one I read, which is Nothing Down by Robert G. Allen.
Okay.
Great book.
Gotta keep my notes.
Yeah. It was just one of those. He actually wrote it in the 70s and then kept updating it.
Really?
And so, he had some updated versions, but I actually got the original one when I went to the library.
What was that author name?
Robert G. Allen.
Awesome. Thank you.
Yeah. And it's Nothing Down. Then he wrote Nothing Down for the 90s, which he wrote after I read the first one.
But so you got the original, you said, from the library?
Yeah. Wow. And so, but like I said, it was one of 3 books in there. And so I was just like, okay. So I learned what all I could. And then I decided I really wanted to buy houses. Well, I wasn't 18 yet. So I just kept reading and studying and trying to do whatever I could to learn about real estate. Cause I was like, as soon as I turn 18, I'm going to start real estate.
Were you the first in your family or was it?
Yeah.
Really?
No, nobody. Yeah. No. My parents had their own house.
Yeah, of course.
But they had never done any rental property or anything. So.
But to be at 16, that seems so unique for you to think to.
Well, my thing is my professor, the one that was teaching us, he had like 25 houses. And he would come in and he would tell us about his house. I'm like, he's working a full-time job, but he's got these 25 houses and these people are paying him rent. And it all just started clicking to me that like he can do all this and still work. And so I was thinking I could do all that and not work. Because my goal was always, I didn't want to work. I was thinking if I could keep from working, this would be the greatest thing ever.
Right.
And, I'm a kid and I don't know any better. So I think not working sounds good.
Yes.
And somebody else paying for my stuff, I was like, it can't be any better.
Right.
So, and the more I got into it, the more I was like, this really is, it's just, real estate is unbelievable. It's just unbelievable what it can do.
So you hit the ground running at 18?
I bought my first house within a month after I turned 18.
Okay. And just bought it and house hacked it or you lived?
No, I bought it. It was strictly a rental.
Okay.
And this was back in, like I said, this was back in the early 90s. So I found it on a classified ad in the newspaper. And the newspaper came out at like 2:00. I called the guy by like 3:00. And I was over there looking at it within an hour. It was like boom, boom, boom. I went in. I wanted to, I was,
you already had that urgency.
I was so excited. And I'd been looking at houses for a few months before that. So I kind of knew what I was, and so, So I met with him, and it was an older gentleman. He was 77 years old, and he had been renting the house. He didn't want to rent it again. And so he was just like, I just want to be done. Mm-hmm. And I was like, cool. And he sold me the house. He asked for $3,000 down. He financed it for me. He took payments. So all I had to do was come up with $3,000.
And you were aware of that up front, that was an option you would go, or he kind of schooled you on that? Because I feel like for you to know how to buy it and then create it, finance, that's crazy.
He probably brought it up because I don't think I'd have been smart enough back then.
I was just like, wow, you were like the most advanced.
No, I don't think I was. Because I knew nothing.
Mm-hmm.
Absolutely nothing about real estate at this point, except for I'd read the 3 books, but it was so foreign to actually how it worked.
Yeah.
And so I didn't really know, but
so you get this first one for $3,000 down.
Yeah. I bought it for $3,000 down.
And it was turnkey or?
Pretty much. I ended up having to put carpet in it.
Okay. So you got a little bit of practice on that.
But I went down to the local hardware store because this was back when I was still at home. And I went down there and they were like, we just took out some really nice carpet out of a house. And so I bought used carpet. Used carpet because I didn't know.
Yeah.
I just did the craziest stuff back when I started. But, and then we went in and painted the house because it needed a paint. And so we did that ourselves, me and my dad.
Wow.
And so we did that and got it ready and rented it. And
then you still lived at home and rented this one?
I lived at home up until quite a while in.
Good.
Because
smart.
I was still going to school at this time. So I was going to school. Mm-hmm. I was buying houses and think I was living the dream.
You kind of were.
Well, yeah, awesome. It was really cool because I could do it on my own time, anytime. And I had a ton of free time because school doesn't take a lot of time.
Yeah.
I still wasn't working. So I was going to school like 15, 18 hours a week. And then I had all the free time in the world to do real estate.
Yeah.
So
So you were buying them off market at that time too, or was it off MLS? Or?
I started out, I was buying them out of the classifieds.
Oh yeah.
And then I started going to the real estate agents and buying them on
the classified market. Would be like a for sale by owner?
Yeah. I guess they're all for sale by owners.
Oh,
but
okay.
Yeah.
Okay.
But yeah, they at least advertised it. They usually have a sign out.
Mm-hmm.
But it was not on the MLS.
Okay.
But then I started buying off the MLS because I was, I didn't have any money. So all I was buying was cheap houses, like super cheap, man.
Like how cheap?
I wouldn't buy anything over 25.
Okay.
So most of what I bought was between 10 and 20.
And when you were buying those, you were buying them cash or you were getting funding?
Well, after that first one, I was like, I need to go to the bank. And so the next thing I found was I had a real estate agent called me and said they had 2 houses, same street, same owner. They needed to sell them. I went and looked at them. They were both turnkey. They were ready. They were nice. And so I made a deal on those. One was 15 and one was 24.
Okay.
So still right in my range.
Mm-hmm.
And like I said, this was back in the day when you could get smoking deals. And
yeah.
They were really good. So I got them under contract and I was like, what am I going to do now? So I went to the bank and every bank turned me down because I was a college student and didn't have a job. So everybody was saying no. And finally I went to one bank after I had probably been to 20 or 30 banks. That was one of the things I'd learned is that you have to talk to a lot of people. And so I was just continuing to go. And finally I went into this bank and he said, yeah, we can give you as long as you can put 10% down.
Okay.
And I was like 10%. I was so excited.
Yeah. Because of your price range too. That's really doable.
Right. It was nothing. Yeah. And so I was just like, okay, I can do this because I had a little bit of money was the reason I was doing it. And the reason I had the money was because I had some baseball cards and football cards. And I actually sold a case of football cards that funded the first 3 houses I bought.
In college?
Yeah. Yeah. I sold this case of football cards. It was 86 Topps football that had Jerry Rice's rookie in it. And I sold that case and that gave me the down payments for those first 3 houses.
So you're already hustling.
Oh yeah.
Wow.
No, I did from the very beginning.
Yeah.
But yeah, it was cool because with him giving me only 10% down, it just expanded how much I could buy.
Yeah.
So quickly because then once I started getting rents from these people, those rents were, they built up so fast because the rents were so much better than the pricing back then.
Yeah.
And so I could build up money really fast. And so then I could buy them really fast. Mm-hmm. So I just kept buying as fast as I could buy. And I bought 13 that first year.
Wow. At 18?
At 18 years old.
Wow.
And so I was buying them as fast as I could. And then after I had bought the 13th, he said, I can't loan you any more money yet. The board says that you can't
Wow.
you can't buy anymore because you don't have a job. And so then I was like, oh crap, I'm gonna have to go find a job.
Because you're funding the whole thing from the rent. From
Yeah, just funneling all the money back in, and then I was still selling baseball cards and stuff. Any money I had, everything I was doing, I was putting in real estate because I was like, I was thinking it was the greatest thing.
That's awesome.
So, but then I decided I was going to have to go get a job, which was the whole reason why I got into real estate in the first place, because I didn't want a job.
Well,
So,
the fact you're already 13 in that first year,
Yeah.
18,
yeah.
you almost feel like, why would I work?
Well,
You have to go.
exactly what I thought. But then I was like, they're making me go to work.
Yeah. So what'd you choose to do?
I went to work at the post office as a mail carrier.
Really?
And yeah, I started carrying mail, and,
Okay.
which was really good at the time. They were paying, what I still call ridiculous money, because I was going to college,
Yeah.
and all of my friends were graduating, and they were graduating making less than half what I was making at the post office, carrying mail without a degree or anything. And I was just like, this is so. It was just perfect.
I bet it was blowing your mind too to have that good schedule with the mail carrying, and then you had your real estate, and then you're looking at someone that's doing, a lawyer or a doctor or something like that, and you're like, why are they coming out making less?
Well, yeah. Well, and my degree was going to be in business management. So
Yep.
most of them were getting jobs in finance. Most of them working for banks or insurance companies or stuff like that.
Mm-hmm.
And I'm like, I can carry mail and I was making more than double. Almost 3 times at some points.
And then still had the passive.
Well, and I'm also still living at home, and my parents are still paying my expenses.
Wow.
So I was taking all of my income and using it for down payments.
Yeah.
And the other thing was because I was working for the post office, the bank said because it was a federal job, I didn't have any seasoning. I didn't have to keep the job for a certain amount of time.
So you instantly were able to boost your funding
I instantly was able to get the financing back
with that same bank.
with the same one. Yeah.
How long were you with that bank?
I was with them a long time. Literally, they probably funded my first probably 30 to 40 houses.
What's that relationship like when you're young, doing so well, but you have that strong relationship with the bank? Did it just get easier and easier?
Oh, yeah. The longer you're with somebody, the more they understand your business. They understand what you're doing. They get to see your accounts, ebb and flow.
Yeah.
Everything gets easier the more you deal with somebody, just like in anything. The better you know somebody, the easier it is.
Yeah.
But at some point they start to get a little tighter because they start saying, we got a little too much exposure to this 20-year-old kid by then.
So you're 20 and have 40 houses.
Yeah.
Wow.
Yeah. I think, it was something like 37 to 45, somewhere in there.
And then still work in the post office.
Still working the post office full time.
Then what's next after that?
Let me see.
Because did you graduate college?
I didn't. I never finished.
Yeah,
I ended up, when I started with the post office, I started trying to go at nights.
Mm-hmm.
And after a while, I was just like, well, this is pointless. So I keep saying I've been a senior for like 20 something years now. Because I think I've got 94 hours, but
So you're pretty close.
yeah, I was close, but
Yeah.
there's no reason to go back now.
Yeah.
So, but though after that, then, I got into the flooring business, about the same time. There was about 3 or 4 years of overlap there where I owned the flooring store, but I was still working at the post office.
Okay.
So
So you started the flooring company. You didn't start laying flooring yourself.
correct. No, we were just selling back then we were just selling carpet and vinyl.
Okay.
Because hardly anybody was doing tile back then. That was fairly a new thing, and
Okay.
there wasn't much money in it, but pretty much it was just carpet and vinyl, and got into that really, gung ho, and really was growing that business while I was still working at the post office.
Wow.
And I, in the meantime, I had gone into management at the post office because it gave me a little bit more freedom to be able to take phone calls and be able to talk on the phone, because I couldn't do that when I was carrying, but I could do that when I was supervising. So I did that in the meantime, and
Continued to buy.
yeah, I was continuing to buy, and I was also trying to run the flooring store.
Yeah.
And so
That's a lot of balance.
it was a lot. And, back then, which was, it's almost 25 years ago, I was working 80 to 100 hours a week between the three. It was a lot of hours.
Mm-hmm.
And pretty much up until a few years ago, I was working 60 to 80 a week, and forever. It was one of those things. I did what I had to do, and it ended up being a lot of work.
And it's natural for you. You just.
Yeah, pretty much. It was one of those things when I was younger, I always thought I didn't want to work, but then it was like, I always knew that I would always do whatever had to be done or whatever needed to be done.
Yeah.
And it was like, I was going to get it all done. So I it pretty much came natural, I would say.
Then with 60 to 80 hours a week for 25 plus years, how do you keep up that pace? I know it's natural for you, but how do you,
Yeah, it's whatever you get used to. If you get used to working 60 hours a week, then 40 hours seems like you're not working. If you get used to working 80 hours a week, 60 hours doesn't seem like much.
Yeah.
So it's all in what you get used to.
Okay.
And it was one of those things where whenever I came out of high school and I was going, for 5 days a week to full time, and then I got to college and I was going to school 15 hours, I was like, this is a joke. This is like so easy, but it's all in what you get used to. So it was the same with work, same with real estate, same with anything.
Okay.
But I was just like, I knew, and my whole goal from the very beginning was to not work. Mm-hmm. Well, then it was to retire early and be able to do what I wanted when I wanted. Well, everything I did made me work more and harder and, have less free time. So, but I knew I was like, it was a means to an end. It was a way to get there. Yeah. And so that's what I kept doing.
So what now, you say up until a few years ago, you were still working those hours. So what changed a few years ago? Is that when you stepped back?
I had over the last 20 years, I'd expanded the flooring business to 3 companies, 2 retail and a distribution center.
Oh, cool.
And so we had grown exponentially over the years.
Yeah.
And so in 2021, I sold those companies.
Okay.
And so when I did that, then I got out of the day-to-day and quit having to do that. So now all I do is real estate full-time.
Okay.
So.
And then the first time I was around you was probably 2019, 2020. So it was right before you sold the business. Mm-hmm. And then no wonder, you became more frequent after.
Yeah. I was still working a ton then. Mm-hmm. And like I said, I was still putting in 60 to 80 hours a week then.
Okay.
And, then I was running the real estate. I was running the flooring companies, and I was also running the lending company because I'd gotten fairly serious about it.
And you started the lending company on your own, or do you have other?
I did. I started it in 2009 after the crash.
Okay.
The houses had gotten crazy cheap.
Yeah.
And
it's almost going back into where you were buying them at a low price. You got another
right. It was another opportunity. Exactly. Because when I first was investing back in the 90s up until I kind of quit buying about 2003.
Okay.
And between 2003 and 2005, I sold everything I had.
Okay.
Every house. Mm-hmm. Because the numbers started flipping on me. They were worth so much, but the rents hadn't gone up enough.
Yeah.
So I started selling everything. So between 03 and 05, I sold everything out. And so then I was just waiting for an opportunity. And
were you able to reinvest some of that, not only in real estate, but in your flooring?
It was mainly in the flooring business because I couldn't buy in real estate because the real estate for me had gotten too expensive because you couldn't buy those cheap houses anymore. Too many people had came into the market. So there just wasn't the opportunities there were before that.
So you always saw the value in reinvesting in it.
For sure. You got to keep the money moving. It's got to be doing something. So
yeah.
So after 03 to 05, I pretty much just invested in the business. And that's part of what helped it grow was we were taking all that real estate money and putting it into the flooring business to blow it up. Well, then in 2008, the crash, all the housing came back. I started buying again the end of 08. In October of 08, I started buying again as fast as I could again. But this time I had a little bit more money. I had enough money for 20% down payments, which the banks required. But I could buy pretty much as fast as I could handle the properties.
And a lot of experience as far as since you already did 40, 50, 60, however many properties.
Yeah.
Emptied the portfolio and now you're refilling it. I bet it gave you a lot of confidence on how to analyze deals too.
Well, yeah, by then I knew what I was doing. And not only did I have the experience, but I also had the money, which helped too. And
when you were buying them in 2009, was it still how you were doing before where you were getting off-market stuff and then going to MLS, or were you buying leads? Did you get wholesalers?
Almost everything I did was off the MLS in 2008, 9, and 10, really.
Cool.
Because there were so many properties, there was so much opportunity, you didn't have to look hard for it.
Oh, that's nice.
It was everywhere.
Wow.
And wholesaling still, even in 2008, 9, 10, really wasn't a thing.
Okay.
There were some of us that we would get a deal and we'd pass it on to a friend, but it really wasn't a thing. It wasn't like it is now, of course, but it wasn't even like it was 10 years ago. It was still really in its infancy. And it was really, a friend of mine would have one and he would say, hey, I've got too many. I don't want to buy this. You give me 2,000, 3,000. It was low numbers.
Just basically a referral.
Yeah, pretty much. And so But what happened is in 2009, I had friends coming to me and they were like, their bank won't loan them any more money because everybody's buying as much as we can.
Yeah.
And the banks are tightening up because of this constriction. And so they were like, I've just bought this house for 20 grand, but a bank won't fund it. And I was like, well, I'll fund it for you. And because I was like, I'd pay 30 for this house. So I was like, I'll sure loan 20 on it. And so that's how I got started lending. And then just kind of kept doing that for investors and friends. And then got serious about the lending business in 2016.
So that's really 7 years of doing it.
I was just kind of doing it on the side because I was still buying a lot. But then, as in 2013, I started selling again.
Okay.
I started selling off these properties. And by 2015, I had sold off a lot and had a lot of cash just sitting.
Okay.
And so that's when I decided to get serious about the lending because I was thinking there's plenty of opportunities here.
Yeah.
And back then, the banks were they're not as loose as they are now. So they were still pretty tight.
Yeah.
And there was still plenty of people looking for money. So I got back into it and got a lot more serious, got actually business cards and started actually trying to go out and solicit for business instead of just loaning to friends and family.
So what does that look like for, I guess, a couple different ways? A new investor coming to you trying to get funding. And then I'd like to dive into like when you do have that relationship and you have someone that's trying to buy on a pace that you were buying, what that looks like.
It looks the same to us because as a lender, all we care about is the property because, and every lender's different. Everybody does their things different. We personally, we don't pull credit. Okay. So we have to make sure that property is worth a lot more than whatever we're going to loan on it because that property has got to be good because if we aren't looking at the borrower, that borrower could be just, they might not ever pay their bills. We don't know and we don't check. So we make sure that property is, I always tell them if I ever take back a property, I can sell it in one day because I can call 10 people and everybody's going to want it for what I'm owed on it. And I don't have any trouble getting rid of properties. Mm-hmm. So by doing that, we protect both the buyer or the borrower because they know their property's worth whatever we're loaning on it.
Yeah.
And the other thing is that they don't get into trouble by over borrowing. So
that seems good. When you're analyzing a deal, what does that look like for someone coming to you? Is that sending you some quick info and then they call you? Do you have a process?
We ask for three things. We ask for a copy of the contract. We want to make sure it's under contract because ethically it's tough if it's not under contract because everybody thinks that somebody else is stealing their deal. Mm-hmm. So we want it to be under contract. We ask for pictures of the property, pretty much just like a regular wholesale packet, just pictures of everything. The more pictures we get, the better. Mm-hmm. But, inside, outside, just everything. And then how much they're wanting to borrow.
Okay.
And with that, it's kind of like when you look at a deal, you don't have to go out to the house anymore. You can look at it. You can look at pictures and an address and tell pretty much if somebody says, hey, I've got this $100,000 house or what they think's worth $100,000 and they send you the pictures of it and they say, hey, I want 60 for it. You can say yes pretty quick.
Yeah, that's true.
It's the same way with lending. Okay. If somebody sends me a house that's legitimately worth 100 and they say, hey, I want 60, we can do that pretty easy.
Yeah, especially since you can sell it in a day, like you said.
But so much of the time, a lot of our phone calls are they're wanting to buy this $100,000 house and they're wanting $120,000. Well, that's not going to happen.
Fund the rehab and everything.
They're trying to, there's so many different reasons, but everyone wants to borrow as much as they possibly can, or most people do. Yeah. But that just doesn't work for our model because we don't know if they're going to pay. So we have to make sure that property is going to be worth. And the other thing we have to look at is if they don't pay for a few months, that's going to add up. But then also the property is not going to look as good as it does right now because they're going to have given up on it. So we have to factor all that in and make sure that we can get our money back.
Yeah.
But my number one priority is to make sure that we don't lose our money.
Okay.
And so we do that by not loaning too much.
So when you grew it, that 2016, you say you start taking it more serious. Did wholesaling start kicking in around that time here locally?
Uh-huh.
Okay.
Yeah.
And then did you continue to network? Is that how you built it up first, was just finding those wholesalers, or you went to buyers since you were already established? Or
it was a little of everything. I think in business, the more things you do, the better. Okay. And, I consider networking working. So it's part of my job that's the reason I go to all these networking things, is to get in front of people that might either have referrals or might be buying that need somebody to loan money.
Yeah.
Because almost all, 99% of our business comes through repeat and referral.
Yeah.
So it comes from people that we've met at these networking events.
Yep.
And I don't like to talk. So
Yeah.
I don't go to because I want to visit. I go to these because I want to meet people that, might refer us business later.
Well, and I think it comes off that way as well. We talked about it earlier today. That's what we gravitated towards with each other is it was comfortable, but it was also very efficient on like how we can actually get to a solution.
Right.
So when you are networking with those people, do you notice anything different with your approach? Do you think being more laid back like that grew your business, or was it purely based on performance?
It probably hurts my business that I'm not more outgoing.
Okay.
Obviously, if I was more outgoing and talked to more people, it would probably help.
Yeah.
Because usually when I go to networking event, I always sit in the back. I usually sit, without people around me. And so, it would probably help if I was more outgoing, but you have to work with what you got.
Well, when you say networking, it's like, obviously you do a good job of it because you say I can sell a house in a day because I can call 10 people. And that's powerful. Like, of course, I think of the people I could call if it was needed. But an example that I think of is the house I grew up in. It was a few months ago. They were wanting to sell it. And I looked at it. And for me personally, I had to be at a lower number. And I was like, we have a couple options, but let me call a couple people. So I called maybe 4 or 5 folks and ended up being able to get them linked up with a buyer, as is, cash, the same old stuff. But from the time they told me they wanted to sell to where we were closed and done with the property was less than maybe 2 weeks. And that's with title too.
Right.
And during it was just feeling normal because we closed deals a lot. But when I looked back, I was like, wow, I'm really happy that I had enough experience to do that. And it was more off the networking, like, of course, the experience, but being able to call these investors directly and push on them for prices and be able to come to an agreement that makes sense for them, but also everyone involved. I think it goes a long way with that experience. Do you still buy now?
Well, I think.
Oh, my bad.
You get it's not only the experience, but it's also having those contacts. But then it's also being able to talk to them intelligently about what you're seeing at the property.
Yeah.
And all that, it helps the seller too.
Yeah.
That's the whole thing that most people don't realize about wholesaling is they say, they're so worried about people taking advantage. But just like that, you help that person so much because you took all the time out that they would have had to get a house ready, get it marketed. You cut all of that out by being experienced and being good at what you do.
Yeah.
So I think there's so much benefit to wholesaling that most people don't understand.
Well, yeah, like you said, being able to smartly tell them about the property and the values in the neighborhood and things like that. I mean, when I first started wholesaling, because I started in real estate on the new construction side and then came into wholesaling, and it was all the negative connotations from other folks, even though I was a realtor too, doing business on that side of the business. But when it started taking off, I was like, no, like, I'm not only helping the seller, I'm helping myself, I'm helping title or whoever else is involved. I'm helping the end buyer because they're getting a property. And then you build that relationship and you realize you really sell most of your deals to the same folks.
Correct.
And
the whole thing,
they're good
wholesalers, they serve they have a lot of benefits.
Mm-hmm.
And a few bad apples give them, this negative connotation. But overall, wholesalers do a lot of good things.
Mm-hmm.
But you can say that about anybody. I mean, in any type of field. I mean, you can say that there's bad people, there's bad realtors. I mean, there's lots of bad realtors that don't sell any houses. I mean, there's in anything, there's lots of bad people. So I think it's weird that they get the negative connotation, but some of these other fields don't.
Yeah. What do you think about the culture around it now? Because I buy deals from some wholesalers, then I'll wholesale a deal right back to them 2 weeks later because it didn't work for me or whatever it may be. Has it always been like that in Oklahoma City, that it's friendly, or it's new?
I would say we've always been pretty friendly. We've never been as collaborative as we are now. Okay. And I think a lot of that social media has made it easier
to see.
Because used to, if we wanted to talk to somebody, we either had to go set up something with them and go meet them. Mm-hmm. You don't get to see what they're doing every day. So you don't know what they're buying. You don't know who's buying. Yeah. A lot of times we didn't know what anybody else was doing until we talked with them. And then a lot of times it was like, you talked to them in passing, you didn't really know. So, but yeah, that's definitely a lot newer thing. And I think it's pretty unique to our market. There's some other markets that have a lot of collaboration.
Which ones do you think?
Phoenix is one of the big ones that everybody talks about. Phoenix is very collaborative.
Yeah.
And, but really between Oklahoma City and Phoenix are probably the most of all the cities in the country. Yeah. Dallas has got a little bit of that, but then they've also got a little more fragmentation.
Okay.
But yeah, I mean, I think it's really good for Oklahoma City.
Yeah. I've noticed that. Well, it's the only thing I've been around, so it seems more natural. But the other thing I've noticed is even with these other markets, especially Phoenix though, but other markets, since some of these people are coming from meeting us at these events here locally, they end up being, cut from a similar cloth. So I called a couple people in Kansas City, some that wholesale by themselves. We were able to get really quick results with them just because they're in the market every day. And you can find that in other markets, but sometimes it's hard to find the right people, I guess, finding boots on the ground and things like that.
Yeah.
Do you ever invest out of state, or was it always Oklahoma and local?
Always Oklahoma. Yeah. I'm really big on, I'm hands-on. I'm pretty much a control freak. So I like to be involved in everything. Mm-hmm. So, I liked everything being able to be able to drive to it, see it. Pretty much now, most everything I buy is, as close as I can get.
Okay.
The closer to my house, the better. Mm-hmm. And if not, I want it to be in my normal drive patterns.
Oh yeah.
Because if I'm normally driving close to a property, then that's good. Mm-hmm. The farther they get out from that, the more I dislike it, and the cheaper it's got to be.
Oh yeah. So yeah, you can be a little more selective.
It's just got to be a better deal if I'm gonna get out of my normal patterns.
Yeah. So. Do you find yourself funding more now, or buying still just as aggressively?
It's a little of both. Because, I'll buy deals if they come along. Mm-hmm. All we buy now is commercial. I don't buy any houses anymore. If I do get a house, I just, I'll wholesale it to somebody that I fund.
What's different on the commercial side?
The tenants.
Okay.
You don't have landlord tenant act. You can, in a commercial lease, you can put in whatever you want. You can make them responsible for everything. You can make it to where they can't call you. I mean, oh, wow. You can write up whatever you can get them to agree to. So it's just a lot different because I'm dealing with business people instead of homeowner tenants. It's so much different because you're dealing with a different type of customer.
Yes, and a different conversation.
Completely different.
Is it more efficient that way, or do you have to go around in circle? I feel like it'd be more. On the residential side, it'd be more emotional, but maybe the business side is too. Or?
No, it's a lot less emotional.
Okay,
and that's all of what I wanted to get out of was all that dealing with residential tenants.
Yeah.
So yeah, I just try to stay out of that at all cost.
What are some tips on the commercial side? Since you went into that side, is it you started with certain size buildings or certain areas of the city or development, or what do you look for?
Well, the very first commercial building I bought was the commercial building where our first flooring store was. And so that's, if you're your own tenant, you're going to pay. So,
yeah.
That was one of those things where I was like, if I can own a bunch of these, it would be really nice where I've got a business paying, rent, and they take care of everything. Cause, we kept the building nice because we were running our business there.
Yeah.
Which is one of those things I found out is that businesses that have good business, they keep their places nice.
Yeah, because they have to keep running.
They want to keep it up and they want the customer to feel comfortable. So they're always updating and upgrading. And so I did a lot of that where I was just buying businesses or buildings that had good businesses in them.
Oh, okay. And then kept the business running?
Well, yeah, they had the business. So I just was buying the building and then kept a good tenant because.
That's nice.
Yeah. So
when did you start going into the commercial side? I know you bought the flooring store.
I bought the flooring store in 1999, and then I didn't buy another one until 2008 as the market started to change. Mm-hmm. And then I bought it was partially going to be our warehouse for the flooring store, but then it had 3 other spaces in it. Big, huge spaces. One of the tenants was already there. Mm-hmm. So there was one big commercial tenant that took about a third of the building.
Okay.
And so they were already there. And then we had to lease out the other 2. So, and then we were going to keep our warehouse in the back, which was the worst part of the building, but it worked in our favor because we just needed a warehouse.
Yeah. And it worked for you.
We weren't going to retail out of it. We were just going to warehouse. So we rented out the good parts of the building and then kept the bad part for ourselves, which worked out perfect.
Yeah.
And then I was like, this is really nice. Once again, this is perfect. These people that are running their businesses, they don't cause problems. They just pay their rent. as long as their business is successful, they're going to pay the rent. If the business isn't successful, they're going to quit paying the rent, but they're going to move out.
Yeah, that's true because they can't stay here.
Yeah, it doesn't make sense for them to stay, even if they've got a business, because if the business is failing, they just need to move out. So typically they will. So,
well, something I was curious about, since you got into real estate at 18, 16, whatever it is, what does that bleed over into your family life as well, where now there's a culture in the family of that ownership and that investing, or just you?
Everything. I mean, everything we do revolves around real estate, because I feel like, investment property, of course, real estate. The flooring business was out of necessity because we were buying flooring for our real estate. The lending business is in real estate. So everything I've ever done is all revolved around real estate. So most of what I talk about, if I talk about business, is going to be real estate related. So I talk about real estate all the time because I love real estate. I think it's just, I think it's the best thing you can do. So.
What advice do you have for somebody that's beginning to buy and they're trying to buy 13 in a year?
It's tough right now because the pricing is not the same as it was back when I started.
So it has to be a better deal.
It's just, it's a difficult market right now because there's so many buyers and there's so many buyers. The money's easy. The renters are tougher than they used to be. They know their rights now. Whereas back in my day, back when I was doing residential, they didn't. It's a different world now. And so, you definitely, I don't know if you can grow it as fast without taking on a lot more risk.
Okay.
So it's
risk in what ways you think?
Primarily in the fact that you're paying closer to what properties are worth.
Okay.
And
so you're already in it a lot.
You're in it a lot more. The rents aren't near as high compared to the pricing as they used to be.
What was
back in my day, I couldn't lose money when I was buying.
Okay.
There was no way. That first house I bought it for $8,500 and I rented it for $300 a month. So it was bringing in $3,600 a year on an $8,500 house. You can't lose money on those. And even those next two, the $14,000 and the $24,000, those were, the $14,000 was renting for $325. The $24,000 rented for $500.
Okay.
So it was like, you can't lose money at those rates.
No, because it's only a couple years and you already own it.
Right.
Quick.
Yeah, it was so fast. And back then I was putting everything on 5 and 7 year notes because I didn't need the cash flow. So I was just trying to get them paid off.
Okay.
So it's a different world now. So you have to look at it differently. And so the only way you can grow really, really fast now is to take on a lot of risk. And it's usually, I don't ever advise anybody to take on that kind of risk. I think you're better off growing slow and waiting until the right opportunities.
Okay. So you think there's seasons where when the opportunities do come up, maybe that is where you buy several.
You go in hot and real estate's really cyclical. It's up and down and there's our cycles and you never know where we're exactly on the cycle, but you do know when we're at the bottom or near the bottom because everybody knows it. You can feel it. Back when I started, it was pretty bad. The market was not real good in the 90s. But then after 2008, everybody knew the market was bad. And everybody knew the market was bad at the end of the 80s in Oklahoma because we had the oil bust and, real estate was still down from that whenever I started buying. And then 2008 was a whole nother thing. And you could tell when you're there because that's all anybody can talk about is how bad the real estate market is. So you'll know when you're at the bottom, but it's hard to ever know when you're not in the bottom because the rest of the cycle is tough to see and when you're in it. But
so you got to kind of just analyze what it looks like for you.
Right.
As far as the market then, since you've been so experienced in Oklahoma City, I feel like when interest rates shot up in the past couple of years, people were thinking, oh, it's going to crash, it's going to crash, it's going to crash. What are the thoughts you have on the market for here locally?
It's so much tied to interest rates. But as we've seen over the last few years, interest rates haven't had the effect that people thought they would.
No.
Because prices aren't coming down.
No.
Everybody's just waiting on interest rates to come down.
Yeah.
And so everybody's just holding on. And as long as people are going to hold on to properties, then we're not going to see a whole lot of change. We're going to have to have a significant event for something to happen. And as long as people are excited about real estate, they're going to continue to buy. And it's going to have to take something that makes people like us not want to buy property. And when you go to a networking event, and there's, 100, 150 people there, you've got to think, what is an event that's going to make all of these people want to quit buying real estate? because that's what it's going to take. Because as long as there's that many people, if you have a little dip, just even a little dip, all these people swoop in and buy it because there's plenty of cash sitting there. There's plenty of people wanting to buy there. So there's nothing to make a crash. The only thing that you can get a crash from is when the people quit wanting to buy or the money dries up.
Yeah.
The banks won't loan them the money.
Yeah. So it's almost more than just the people buying them to live in them. It's all on the investor side.
Well, it's both because, I mean, right now there's still plenty of people that want to buy. They just can't get the interest rate they need to make it make sense. But if those interest rates dip, those people are going to be right back in the market.
Yeah.
So
yeah, because the market on that side still stayed pretty steady too.
there's still plenty of buyers. There's just not enough sellers right now. So, but the buyers are there, and there's a lot of buyers that are on the sidelines because of interest rates that would come back in if interest rates drop. So,
well, I have a question then for a quick example on the funding side, because you were saying earlier, if the house is, worth $100,000 fixed up and they're asking 60, that's an easy lend for you. What is someone having to do once they get that approval from you? Is there an appraisal process? How much do they have to bring to closing? What's it look like?
Once we approve it, it's approved. We don't do appraisals. I do my own walkthroughs of the properties. So
those are required walking through?
Not necessarily. I usually only do that with new borrowers or people that I don't know as well. But if I've done business with somebody for a while, I very rarely walk through there. But I would say I probably walk through 50% of ours.
Yeah.
And it just depends on the deal. But what happens is if I say if I say I think I can do this, then I'll go out the next day or the same day, next day, or the day after that and go walk it. And then once I walk it, I'll tell you it's approved or not.
So someone can get their funding approved in 2 days?
Yeah. I mean, most of the time, I would say most of the time it's within 30 minutes.
Really?
I'll tell you 99%.
Wow.
The only time that I change my mind is if I go out there and it's totally different or they send me pictures like excluding stuff. And usually that's the reason I go out there is because I knew they were excluding something. Like if they tell me it's a 3-bed and they send me pictures of 2 of the bedrooms and I'm just,
what's the
yeah, you're right.
open it up. There's a hole.
Yeah, I think there's something wrong as a lot of times the reason I go out.
Okay.
And, but yeah, I mean, it's very rare that I go out there and I'll change my mind. It's most of the time, if I tell you I'm going to do it, I'll do it. Yeah.
That gives a lot of certainty.
Once I go through it, then it's for sure. I mean, there's no way I'm not going to make a loan after.
And then you're just waiting on title work.
Yeah. Yeah. And title work takes a lot longer than we do. I mean, we can, I fund a lot of stuff next day when we have to. But I try to get 3 or 4 days if I can, but we can fund them really fast. It's title that takes a while. It takes a week or 2.
On the funding side then, for this example of the $100,000 house, how much is the investor bringing to closing?
They're going to bring, it depends on what they bought it for.
Yeah, true.
Because if they bought it for 70 and I'll loan 60, then they're going to have to bring some money. Now, if they bought that house for 40, then they're going to get money at closing.
I guess I mean more, what are your fees?
My fee is I charge a 4% loan origination fee. Okay. So on that example, it'd be $2,400. And then I charge 1% per month interest only on the payments. So they'd pay $600 a month. But other than that, we don't charge any other fees. Our loan origination is the only one. We don't charge for appraisal. We don't charge for inspection. We don't charge doc prep. We don't charge all these other fluff fees that banks charge. We don't charge any of those.
And then if I was needing to bring money to closing, I would pay that 4% and then the 1% a month.
The 4% comes out of our funds.
Okay.
So you kind of pay it, but not really, not directly because it comes out of our funds.
It's out of the proceeds. That. Okay.
So, but yeah.
And then on the interest only, how long would you say most people keep those in place before they refinance?
It all depends on the market.
Okay.
I mean, the market changes all the time. And now with interest rates as high as they are, people aren't refinancing out or
they're just keeping it.
They're just keeping the loans.
Yeah.
And their flips are taking longer than they were. So they aren't selling them as quick as they were. So,
do you have a time limit you would rather these flips go for when you're lending to someone, or does it not matter?
It really depends on, there's so many variables in real estate.
Yeah.
So, I mean, obviously if they've got the house done and it's on the market, I mean, and it's beautiful and all done. I mean, we don't care if they want to keep it forever.
Yeah, because you're getting that.
We get the interest payment every month.
Yeah.
Now, if they haven't started on the project and they, the house is all grown up and it's not looking good, then we would rather get those paid off.
Then that's one you're going to have to take down and sell in a day or 2.
Possibly, yeah.
Okay.
But that rarely happens because of the way we get into our loans. If you get into a loan right, most people don't want to give them back.
Yeah.
if you have a $100,000 house for 60 grand, most people don't want to give it back because they know they can get 70 or 75 or whatever.
Yeah.
So they very rarely want to give them back. So
what about on the interest rate side? Is that dependent on the investor?
No,
you don't do credit.
We do all of our loans are at 12%. So
Okay.
we charge the 1% per month, and we haven't gone up as interest rates have gone up. We've just kept it the same to get more volume. Because we were at 1% a month back when interest rates were at 4% at the banks, but now they're at 9.5, 10, and we're still at 1%. So.
Yeah. So it keeps, well, I guess that gives you a little bit of confidence too on your business because it's steady growing.
Right.
You're like, well, we just stayed the same.
Right. Yeah. No. Yeah. You can't complain about our interest rates getting high because they're the same as they were 15 years ago.
What do you think is that type of funding attractive to a majority of investors, or does it take a certain investor that wants an interest only 12%?
Our biggest thing, the biggest hurdle is loan values. It's not the cost. The cost doesn't really matter to hardly anybody. It's really the loan values. Our loan values are what makes us tough.
Yeah.
Is because somebody is usually going to have to bring money in some way or another, whether it's the down payment or a rehab or, just carrying costs. Somebody's going to have money. So, for the most part, that's really our biggest hurdle is loan value.
With some of those other lenders that may fund at a different percentage, they don't have to be at 60 on $100,000 house. They can be at something else.
Well, and some of the other private lenders like us, they'll pull credit. And because they pull and report credit, they will loan more than we will because they aren't as worried about the property as we have to be because we'll take, borrowers that aren't always the best. If they get somebody that's got an 800 credit score, they know these people are going to pay whether their property goes well or not. Mm-hmm. So sometimes they'll be able to loan more because of that.
Well, so someone that maybe buys on a good pace, they may find your route attractive because it's always the same. And if the market is in a position where they're refinancing on their planned date, it makes more sense instead of going through those variables of credit pulls.
Well, we do so much of that where people use us for their purchase financing. Mm-hmm. They go in, they fix them up, go back to the bank, pull all their money out, use burst strategy. We do. I mean, that's probably, it could be up to 50% of our business is those people that are just doing tons of turns.
Well, that seems like one of the most efficient ways to do it where it's not cut and dry, I wouldn't say, because it's simple, but it's like really efficient, but just very smooth.
Well, it is super efficient for them because it's not like going to a bank where you're, all the processes that the bank has and everything. We just fund them. And as soon as they get title work done, they can close and they can get them done. And it moves so quickly.
Yeah. And what title companies do you like? Do you care?
I don't really care.
You've been doing it for so many years.
We've had problems with most of them now. There's
what are problems do you think?
It's title work. And a lot of times it's like they're not reviewing it.
It's just taking too long? Or?
No, they're just not doing it. They're not. They'll issue a title insurance policy, but they don't look at the title work. Mm-hmm. We've had 3 claims in the past probably a year and a half, 2 years.
Wow.
And it's all been just like stuff that they should have caught and didn't catch.
Really?
Yeah.
Wow.
So, but I mean, it's came across the board. They've all 3 been with different companies. So I think there's
that is pretty crazy to be with different companies.
Yeah.
So you're really, since you're on the lending side, you don't mind because they're using whoever they're using. But on the buying side, you don't care either. You just use whoever.
I have my favorites just because I have relationships with those.
And I find that so important.
I think there's some of them that are better than others, and mainly because of speed and simplicity and easiness. And, some of the closers will work with you a little better than others.
Yeah.
If you want something on the HUD a certain way, they'll help you with that.
Yeah.
Whereas others are like, no, it can't be that way. So.
Well, it's crazy how important some of those details are for, especially deals that we deal with.
Oh yeah.
On the investment side.
Yeah. On the investment side for sure. Sometimes you don't want your seller to see what the buyer's doing. You don't want the buyer to see what the seller's doing. So sometimes you want the paperwork to look a certain way. Mm-hmm. So.
Well, you mentioned multiple strategies and like the BRRRR strategy and things like that, but what's been the main strategy of you just buying it with 10, 20% down and holding on to them and then selling them when you want to?
I mean, back when I started, I didn't know about anything but rentals because back in the 90s, that's really all there was rentals. Mm-hmm. And so you would buy a house, you'd rent it out and
just wait.
Yeah. And over time you'd make a lot of money and it just took forever. But all these newer strategies are all new within the last 10, 15, 20 years.
Okay.
So even flipping wasn't really a thing back then. There were some
Really?
people that did some flips here and there, but it wasn't like a business like
It seems like so normal now. You go,
Right.
every house is flipped. You go to a house, you can tell, or even the house I live in, it's a flip. I mean, it's a 19 whatever home that they flipped. So, but now there's people that, most investors I know dabble in a few of each.
Right.
But there are some that are just flip. No, I just flip in this price range. No, I'm luxury flip. I just do these. Because I remember when I did wholesale some from the Plaza District, it was specific buyers that wanted that.
Mhm.
They're like, no, I'll take that potentially 700 ARV property, because a lot, it's kind of sectioned off like that. But on the rental side, what advice do you have on the tenants? I know you say tenants know more on the rental side now, but is it still good to get a certain like what's the
The main thing is screen your tenants.
okay?
Screen them before they move in. I mean, the more you can learn about them before they come in, because no matter what you get, you're going to have to deal with it on the backside. So you might as well learn as much as you can about them.
And you still do the screening, or do you have people that
Like
do
I said, I don't do residential. So,
Oh yeah, you're on the commercial side.
yeah, and because of that, I mean, I like control of all my stuff, so I still do all my leasing. So
Okay, good.
and that's one of the reasons that I got out of residential is I was having to do so much of that.
Yeah.
Because when I got back into single family in 2008, by the end of 2009, I had over 50 of them.
Okay.
Because I was buying about one a week.
That's a lot of
it was so much because I was looking at properties, I was buying the properties, I was contracting the rehabs, and I was doing the rentals, the leasing. And that's the one I decided I needed to move completely to commercial. It was so much.
So did your workload not necessarily go down, but it's like those books, like the 4-hour work week and all those things. I know you work a ton, but did it make you work smarter when you went to commercial? It was
Not
just better
necessarily.
moves,
It just made me move my time to something else, to something different. And I mean, it's, I'm one of those that I'm kind of, I guess, working that philosophy that you're going to have to work hard.
Yeah.
I always thought I could, when I was younger, that I could do it without working. And then as I got older, I figured out, the harder you work, the more you make, the better everything is. And the easier everything becomes.
Yeah.
Because I think some people work so hard trying to get out of work. It would have been easier just to do the job in the first place. And that's one of those things I've learned over the years is so many people try not to do stuff, or they think that because they do something, it makes it, not as advantageous to them. And I think if you just go out and do the work, then everything goes so much easier.
What are some things you do besides work? What are some hobbies or something that you got that you enjoy?
I mean, now I play pickleball a lot.
Okay.
I love pickleball.
You go to Chicken Pickle or somewhere?
I play at the Greens now, but I used to play at Chicken
Where's the
Pickle.
Greens? Is that the golf club, country club too?
Mm-hmm.
Okay.
But I play everywhere. I'll go anywhere in the country to play. I love playing.
Do you
tournaments.
travel for it?
Oh, yeah.
You really? Oh,
yeah.
so you're
I
pretty
love
good.
playing tournaments. I love pickleball. I mean, literally, I'll go anywhere.
When'd you get into it?
It's been about a year and a half now.
Oh, so it's new.
Yeah. Oh, yeah.
And then you just dove in?
Oh, yeah. 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 I'm one of those, if I get into something, I'm pretty in it. So,
Yeah. I'm similar.
Yeah.
I got into shooting pool in the last year, even though my mom grew up teaching me pool because she plays. But in the last year, I got addicted to where I was like, okay, well, yeah, I want to play this. I want to do that. So on the pickleball side, do you have someone you normally play with, or is it singles?
Yeah, I usually play doubles. And
Okay.
I've said now I'm never playing singles again. But
Why?
I had a tournament. Actually, I had 2 tournaments, and I thought I was going to pass out heat stroke. I mean, it was really bad, and it was so hot.
Where were you at?
The first one was in Mesa, Arizona.
Dang.
But that one wasn't too bad. It was in the 80s, but then the last one was in Dallas, and it was like 94 degrees,
Swampy.
and it was hot. It was humid. And I should have never done it, but
And
now I just play doubles.
Is there? Oh, on the double side, do you have a specific teammate? Do you guys join
Usually,
together?
I mean, I have 2 or 3 guys that I play with most of the time. So.
Local guys?
Yeah.
Oh, cool. Do you play with Roshan ever?
I have. Yeah.
Okay.
Oh, yeah.
Yeah, we were trying to play.
He's a big tennis guy. So
Yeah, we're actually going to play tennis at this Will Rogers place.
yeah.
So no,
Yeah, he's pretty good at tennis.
he is.
Yeah.
He's probably going to whoop me. He whooped me in chess for
Really?
sure. I don't claim to be a chess player by any means, but I know how to play.
My son is big at chess.
Well, they need to play.
Roshan played him once.
And he
Roshan
beat him,
won't
right?
play. No.
Oh no,
Roshan won't play him.
no, that your son whooped him.
Oh,
right?
yeah.
He brought it up that day. Actually.
Oh, really?
Now I remember.
Yeah.
Because we played and he had to give me all these handicaps, and then it got better and better. But he mentioned your son.
My son is crazy good at chess.
How old is he?
He is 20 now.
And he plays, does he do that professionally? Or?
He's an amateur, but he's good.
How long has he been playing?
He started at COVID, so he's been playing 4 years.
So he's all exceptional at it, and it's new?
Yeah.
Wow.
Yeah. But he plays a lot. I mean,
really?
Yeah, he was there for a while. He was playing 6 to 8 hours a day.
Okay.
He was playing a lot.
So he does tournaments too?
Oh, yeah. Yeah.
So he's got that. You have pickleball.
Yeah. Yeah. And that's one of my things that I was going to say is I've got this super addictive personality. Mm-hmm. And so if I do something, I'm all in. I don't have to do stuff.
Okay.
So I'm pretty, I'm really selective about what I get into because I know I'm addicted. It's the reason I don't drink is because if I started drinking, I would be professional drinker. Yeah. So I never did any of that stuff because I knew that I'm addictive. So
yeah.
I try to focus my energy. If it's going to be on real estate, I'll be on real estate. If it's on flooring, I'll do it in flooring. If it's on pickleball, I'll do it in pickleball.
When's the next pickleball run?
I don't have anything coming up. I think the next tournament's the end of the month. So,
and they're always outdoor, or is chicken pickleball?
No, we play about half indoor, half outdoor. We play here in Oklahoma. Most of our practice time is indoors.
Okay.
We practice outdoor when we go to an outdoor tournament.
Is there? And I'm just so curious about it. Is there age groups, brackets?
Yeah. Oh yeah. Okay. Yeah.
So it's
except on ours, a lot of times they'll do 50 and under. And I'm like, that's not really an age group.
Yeah, 50 and under is a crazy
because we're playing with 20s. And that's a big difference. But they're supposed to break it every 10 years. So you're supposed to play, I'm supposed to play in the 40s. But it just depends on what tournament you go to and how many people they have sign up.
Okay. You got anything else to take your time off of work, or do you find a lot of fulfillment in it to where you don't feel like you're getting burnt?
I've always said I would do real estate if it was free. I mean, I love real estate. And that's the reason I talk about real estate. What do you think makes it? If I know it's going to be multiple things, but why love it? I think it's real easy to figure out the creative side. The creative way to structure a deal, put it together, to see something other people don't see.
Yeah.
When you buy a property, you think, oh, this is a piece of junk, and then you can make it into something different, or you just know that something that they don't. And there's so many different options and there's so many different things you can do in real estate. Mm-hmm. I mean, over the years, I've done so many different things and I ebb and flow back. Yeah. I mean, there's just, there's hardly anything I don't like about real estate.
Well, that was something I was fascinated with, is that you've built a portfolio and then you sell it, then you build another one, then you go commercial, you sell another portfolio, pick up. So that's
all different.
Pretty motivating and inspirational to someone like myself and other people as well, to know that there's a few aspects, like you can build slow, but you can also build it all, sell it all, and move on, build it back up. So that's pretty cool to know that those people are in your circle. Mm-hmm. On the mindset side, you always seem super relaxed. Like every time I ever see you, you're just super chill. But obviously, like, you're smart and you must be detailed because you're looking at so many variables. But what's some advice on the mindset side, you think, for anybody?
A lot of it, I think, it's staying even, not having the big ups and downs. Like you said, I'm really good at staying calm, or at least looking calm even when I'm not.
I've noticed that that's a positive about that too. Like, you may be a little more restless inside, but that's like coping with it. It's working with it, and kind of that calmness that you think you're not feeling, you actually are from that. So you stay calm. So that means maybe on the emotional side, you're not getting too worked up or too sad.
I try to stay in the middle. And the more I can do that, I think the easier everything goes, because you can get too high or too low. And I think either one of those is bad. So
what's your advice on decision making? Because I've noticed in the real estate realm, there's a lot of stuff where you'll be kind of amped and you'll want to make a decision, and you almost have to tell yourself, like, no, I should wait until I look at more detail. Or
I like to make deals that are so obvious that you can't not do them. Because I think if you start trying to analyze them that closely, then you're trying to make a deal out of a deal that's not there.
Okay.
And I think too many people in real estate try to make deals out of stuff that's not a deal.
Okay.
And they waste too much time on stuff that they shouldn't be wasting time on. And so I think that Warren Buffett has some kind of saying about, you jump over the bar, but you keep the bar so low that anybody could step over it.
Mm-hmm.
I mean, that's kind of my deal. Is it's got to be such a good deal that you can't say no to it.
And that was always your view, but because I feel like not everyone may see that they have that luxury to do that because
they don't.
Like, no, I need it.
They don't. It changes. There's times when you make deals that you wouldn't make at other times.
Okay.
But for the most part, I would say 99% of my investing career, I've tried to make deals that I knew were deals. It was, they were plainly obvious.
Yeah.
I always say, if somebody wants to sell you $1 for 50 cents, how many of them would you buy?
Oh, yeah.
So, I mean, if the deal's good enough, you're going to figure out a way.
Yeah.
So you just have to find those kind of deals.
Well, that's nice advice for someone to not, well, it's twofold, but you want to look at every opportunity, especially now, but that's smart to be able to know, like, some people always tell me are like some of the best deals you do are the ones you don't, because it's not a deal and you're trying to force it on there. And you're going to get a rental and be losing money, or you're going to try and flip it and just hold it.
So many people try to force deals, and it's in any market, that's never a good thing. It's never good to force a deal. It's either a deal or it's not. If it's not a deal, just have to move on. But people get so stuck on wanting to make a deal because certain things fall in place, like the seller's motivated, so it's got to be a deal.
Yeah.
It's just not the way it works. It's got to be a deal to make it a deal.
Yeah, I noticed when I first got into the off-market side, deals were a lot easier to come by, obviously, but they were making a lot more sense on the number side. And then as the market changed, you get those deals where you have to not overanalyze, because obviously then it's not a deal, but you have to take a second. Like I remember the times where it was, oh, this house is this. Okay, they're asking that. Cool, wrap it up. We'll move it or take it down ourselves. But it's funny that now, since there are 5 or 6 or 7 strategies you're thinking of, it's an interesting way to look at property, because you're not only solving the problem for the seller, but you're also trying to be strategic on that end. So that's something that's always fascinated me, because people like yourself that are in the funding space and the buying space, different strategies. But then there's someone else that only does one way. Then there's someone else that I only buy rentals this way. So it's kind of intriguing, I guess, especially for someone addictive.
There's so many different things to do, and that's why I say you can dive as deep as you want to get in a real estate, and you can dive as deep as you want to get in analyzing deals too, because there's, especially on the commercial side, there's so much information you can get on a property. Like if you look at a huge apartment complex, there's so many things you can do, and there's so many moving parts. Mm-hmm. And so there's a lot of creativity in that.
Okay.
I'm not that creative.
Have you had to deal with quite a bit?
And I hate apartments. So
really?
It goes back to that residential tenant I don't want to deal with. So, but in my business, between lending and investing and everything, I've been through so many apartments. And so I still like to look at the numbers. I love to look at real estate numbers. I mean, people call me all the time, hey, will you look at this deal? I'll look at deals anytime. I love to look at deals because my specialty is shooting holes in deals, because I'm really good at finding the bad parts of a deal.
Well, that's really good for someone that's coming to you for funding to get that type of clarity.
Yeah.
Like, I see this, and this, and then it's almost up to them to, well, how risky are you wanting to be?
Well, and that's what I say is it all depends on how much risk, and right now you have to take a lot of risk if you want to make a lot of money or you want to grow. But if you want to make good decisions and it's going to be a little slower, but there's always real estate out there. It's always opportunity. So.
What's some advice on that on the purchase side? Is it always been more on the rental for you? Or did you ever do any of the flip side? Do you think the flip is beneficial? Or
everything serves its purpose. And I think the more tools you have in the tool bag, whether you can flip, wholesale, retail, whatever, rental, conversions over to different property typing, whatever you can do, the more stuff that you have, then the more opportunities you're going to get, because every property lends itself to something different. Yeah. And I think if you take a $1 million house in Gaillardia and say, all I do is rentals, well, that's not going to make sense. So you have to be able to move to whatever the market is. But now if you say, I've got a 10,000 square foot house in Gaillardia for $1 million, that's a great flip or wholesale, because that that's under market. Mm-hmm. But if all you do is rentals, then you'll be like, oh, that's not a deal. Well, then that doesn't give you that opportunity. Yeah. So you have to.
Do you learn those over time, or do you get that from
it's over time? I mean, it's all of that. I think you learn it from conferences, you learn it from books, you learn it from podcasts, you learn it from everything. Mm-hmm. But then it's also experience, and obviously you can shortcut some of that, but some of it you can't, because like we were talking about, the way you talk to your buyers and explain a property, a lot of that just comes from experience.
Yeah.
And that's the reason whenever I started buying, when I was first starting out, I started looking at properties before I turned 18, because I wanted to have as much experience as I could walking through houses. And now they say, walk through 50 or 100 houses before you ever buy one, because it gives you so much experience on what stuff looks at. Because when I walked in the one that I ended up buying, the first one, I knew when I walked in there, it was different than anything I'd seen before it.
Mm-hmm.
And so I think if you look at enough deals, you're gonna know what a real deal looks like.
Yeah, that's true. Because even on the off-market side or the on-market side, whether you're trying to just be an investor or a realtor or whatever it is, you get a lot of benefits from those reps. Like,
oh, for sure.
Yeah,
the more of those things you see, the easier it gets.
Well, I always lean on that new home sales I did. It didn't help much on the off-market side, just because it's a totally different product. But something it did help, and it literally came up on my timeline today, was like getting all those rejections and sales skills.
I was going to say, this would be a lot on the sales side, on the handling objections and how to push something through underwriting and closing, and being able to judge your buyer whether they're going to be able to qualify or not.
Yeah, and sticking with them, because even on the off-market side, because it's quick, there are a lot of deals you have to stick with because you're relocating the seller, or there's multiple people involved and it's going to take 90 days to close or something like that. So it's interesting how everyone comes from a different background and kind of finds
and the
their
other
niche.
thing is the best deals are the ones that have the most skin on them. I mean, they have the most problems that you have to navigate through.
Mm-hmm.
The seller that can't be out by closing, and the people that need to move, and they need to have somebody pack up their truck. I mean, all that stuff makes for a better deal.
It's pretty crazy what can come up, because it really could be anything. Of course, normal stuff is moving people or leasebacks or stuff like that, but it can be something crazy like they need this paid and this person needs taken care of, and you're going to have to drive to the seller here to do this. I mean, I've taken sellers to like the title company or to the place they had to file a document, and it's just
had to go pick them up and drive them around. Mm-hmm. Oh yeah,
just to get it done, because sometimes you realize, like, there's parts of it. Because one, you're like, well, you don't want to be used to where they're just being lazy and not putting an effort, but some people are really in a position where you have to be that helping hand. So it's interesting. I know you go more on the commercial side, so it's less of obviously driving someone around.
Wow.
But after all this time looking back, all that rinse and repeat, all that experience, what are a few things you think you would give to someone else? Not only myself, but anyone kind of in the real estate space or just life in general.
I mean, I think it's kind of what we're talking about is don't make a deal out of something that's not a deal. Mm-hmm. Make sure that they're, what you're buying is good. If you buy deals, real true deals, then you can never lose money in real estate, because it's such a good business.
Mm-hmm.
And there's so much opportunity in it. And like I said, the more tools you have in your tool bag, the easier everything gets, because you can do something with so many different types of properties. And there's so many things about real estate that are good, and very few that are bad.
Well, I'm curious. I usually am always, going to be asking majority of the questions, but we've built a decent relationship. You got any random things for me or something that you have any questions about?
What's your plan for the future?
So my plan, when it started out, I think I got slowed up on the investing side and was noticing how much cash was coming in. And then in the past years, my mindset has shifted to be on the buying side. So I think my plan for the future would be getting an established portfolio to get that little bit of security there. But in the last few years, it's changed. Where I see myself is building that portfolio and also getting more hands off on the investing side, but just because I'm getting it more automated, and probably traveling for a long time first, before I settle down into what I'm going to do. When I first started talking to people about my dream, when I first quit my first 6-figure job ever, to start this, they would ask me, like, what are you going to do? Because you have to have a why. And I'm like, well, I want to get, to the off-grid life, like living in the woods and just relaxing, growing food, just nature stuff.
Mm-hmm.
Since then, since I've traveled more, I think that's the near future outcome. And then later on in life, still going back to that woods mentality and probably retiring in the mountains somewhere.
The woods off the grid. You don't need much money to do that.
No, that's the cool thing is,
you can do that really cheap.
Well, that's something that's been interesting for me as a man growing up is everyone has a different level of what they need or what they expect or what makes them happy, all these things. And it's just like creating your dream. So when I think of that, I'm like, well, it'll come with difficulty, but it won't be that hard to continue to build active income and passive income and take a step back and be able to just kind of learn life a little bit. Because I feel like since the traveling had began in the last 3-4 years, I became a better person, not only in conversations like this, but I've just acted better. And this stuff has meant more to me. So I see my future as more of a combination of this. And maybe that's why, I'm continuing to have these conversations because it's something I'm meant to do.
Well, every time you talk to somebody, you're going to learn something.
Mm-hmm.
I mean, it's just the nature of conversation. You just take a little bit out of each thing. I mean, I go to a lot of conferences and I always say, everybody's always asking me, why do you keep going to conferences? I mean, I always learn something.
Yeah.
You're going to learn something there. So.
Well, even smaller ones like they're not even small because there's 150 people there, but those ones that are just weekly, whether it's Alex Moses or Tez or Marty or any of them, they're good events. That's literally the one I saw you at a month ago was an event at Marty's, that REI Mindset.
Yeah. And I go to almost all those events.
Mm-hmm.
Yeah. And you always learn something at them.
Yeah.
You hear lots about the market and about what people are doing and how things are changing.
Well, I didn't really understand at first how valuable that is because that's tying into experience. You're kind of knowing what's going on right now to where when you have a conversation with someone that is trying to tell you differently, you can navigate them. Because the sellers we deal with on the off-market side are going to be a lot more variable with how they respond. Well, no, the market's great. It's this, it's that. But
the other thing is after you see some of these events, you see how much opportunity they have to talk to other buyers because there's another 5, 6, 7 buyers coming behind you. So you do know how, whereas for a long time you had one buyer or 2 buyers. And, back when I started, I was the only buyer. And
really?
On those low end properties, they would call me before they would even put it out before the listing even came out because they knew I was the only one that was going to buy, sub $25,000 houses. It was wild.
Wow.
I mean, I couldn't even tell you how many times real estate agents called me before they'd even put it out because they knew I was the one that was going to buy it.
So you were big on the referrals from day one?
Oh yeah, it was huge. And it was, like I said, it's crazy how much that means to, just have your name out there and be out there in the middle of it. So,
well, as far as for the lending then, is it just Russell Hunt? I mean, is there a specific name we should broadcast for folks?
The website is privatemoneyokc.com.
Okay.
It answers pretty much all the questions that I just answered. It tells all about how we do things and, tries to make it easy. It's got my cell phone number on there. People can call, text. I answer really well to text, a lot better than I answer to phone.
Yeah, for sure. Mm-hmm. Well, man, I appreciate you spending time with me, but also really just kind of being yourself and being a good example because you're a living testament to what real estate can offer you.
So yeah. I've been doing it a long time. So.
Yeah. Well, thanks,
and I
man.
try to help. I mean, I try to help out everybody I can because I enjoy real estate and I love to talk about it. So it works out because, I want to help anybody I can help do whatever. That's what I always tell them. You can call me about lending, but if you just want to call and talk about real estate, I can do that too.
Yeah, or pickleball.
Or pickleball. I'll play pickleball anytime.
Well, man, I appreciate you. We're going to get out of here.
Sounds good.
Thank you.
Appreciate it.